You were together on stage at Beaver Creek a few weeks ago, and Frank says that was the first time that you had done that together, and you're perhaps planning a road show. No?
Well, we haven't been able to sit down
We'll
and
see how
talk
the
about
audience
that.
feels.
Okay, yeah. So this is the second time. So let's pick it up there at Beaver Creek. Among the things that you talked about as students of history is that cycles repeat over and over again. You both say that we're in a dangerous time. You use that word. We have more than $300 trillion globally in debt. We have 2 wars. We have other unrest. We have uncertainty. So Rob, I'll start with you. You think a reset is coming. What do you mean by that, and how could that manifest itself? What does that look like, perhaps?
Lower value of the dollar, higher interest rates, higher cost of living.
And that's it.
I've got more to say than that.
Okay.
No, well, listen, if you look at history and historical patterns, every system corrupts eventually. And every century or so, it happens about every century, you get a change of the world order. And if you look at what's happening in the world today, to me it has a lot of similarities of the world just prior to World War I. And where you had the old empires, which eventually fell and gave rise to the new powers. And it took 2 world wars to eventually get that new world order that we live in today, which started in 1945. And certain things happen as that transition is taking place, and we're seeing that all happen today. And it's basically way too much debt, global debt, government debt, printing of money, social unrest at home because of inequality, and then eventually global wars. And if you look, which has just happened in the last few weeks, we have 2 wars taking place now in the world, and countries are picking sides. And so I think that we're going to be in for a rough time. I think that it will manifest itself in things like, it could happen many different ways, but you could get inflation, you could get hyperinflation, you could get a depression, you can certainly get a civil war of sorts happening in certain places, including the United States, and global wars. And so that's the place we're in today. And if you look back, whether it was the British, the Dutch, the Spaniards, almost every century or so, there's a change. And this is the kind of change we're seeing take place now. You've got 2 global powers trying to be dominant, China and the US, and a whole bunch of peripheral players that are trying to pick sides.
Happy lunchtime talk. Now, and I want to throw some of your own language at you and keep it going here. We're gradually falling off a cliff. There's going to be a complete collapse and crisis. We could see hyperinflation in the US, which you refer to. Now, you've spoken about, and you're probably one of the few people in this room who actually lived through hyperinflation in Argentina. When you're growing up as a boy till the age of 9, you saw the value of your father's businesses essentially wiped away because of that. So how much of your opinion about the potential for hyperinflation, especially in the US and here, is informed by that experience?
Well, a lot of it, I lived it, and my father lived it. He lost everything. By the time he got his money, he got us out of Argentina in 1965, and then by the time he got his money out, hyperinflation had set in. By the time he was paid, it was worth absolutely zero. It had zero value. It was sort of 1,000% a year inflation, just wiped out currencies. And you have to understand that there is the difference between high inflation and hyperinflation. We just experienced a year of high inflation, which will come in waves, and that could, that will come and go. But hyperinflation only occurs when the domestic audience loses faith in their own domestic currency. And if you want an example that's current, you just have to look at Turkey and Argentina. They're going through periods of hyperinflation. And so you look at their currencies, which are collapsing. What are they collapsing against? Gold. So if you look at Turkey, for instance, gold has gone up tenfold in the last 3 years in Turkish lira terms. It's gone up 5-fold in Argentine peso terms in the last 3 years. And you're just starting to see what's happening in Japan. Japan gold is up 50% in yen terms just this year. And Japan is just starting to unravel now. And I think that's what really, in my opinion, if Japan starts to unravel because of their monetary policies, that's when you're going to start to see a contagion effect into the U.S. because they hold so much U.S. treasuries.
Rob, you said that every major paper currency over time has been destroyed. So with the U.S. dollar, when there are crises, money always flows to the U.S. dollar. It's always the cleanest dirty shirt. So Frank's been describing these scenarios, but in your mind, what scenarios could lead to a complete lack of trust in the dollar?
There are a couple of forces at work right now. One, as Frank mentioned, there's been enormous monetary stimulation. You had low interest rates that encouraged all sorts of speculation and malinvestments. And you have this debt that has to be dealt with. Right now, the interest payments on the debt in the U.S. at current rates is greater than what they spend on their military program annually. You can look at Canada. We're going to be in a very similar situation. And so my manager of our Argentinian operation, when he went down to Argentina, just to play with that for a bit, he went down in 2009, and it took 3.7 pesos to buy a U.S. dollar. Last week, it was 1,200 pesos bought a U.S. dollar. 1,200. And just let that sink in for a moment. And that Canada is in a situation that could be going down a parallel course, because Argentina was considered one of the richest countries in the world at the turn of the century, in the 1900s. And today, it's becoming what it is, a basket case. And we have seen in our own country a prime minister who gives away money everywhere. We have housing shortages, health problems, and those aren't being addressed. And it's like we have an unlimited amount of money. We're up to, the debt's just going like this, and the expenditures are going like that, and they're not spending it on Canadians, they're spending it somewhere else. And so it's a real, I think we all need to be very aware that you should be protecting your assets. In Argentina, they will not allow you to buy more than, I think it's 20 grams of gold at a time right now.
Frank, you wanted to say something?
I was just going to say on the Argentinian thing, there was a term in the lead up to World War II and just shortly thereafter, there was a term, it was rich as an Argentine.
Yes.
Because in those days, someone living in Europe would have been just as likely to move to Argentina as they would have moved to the US for opportunity. And in 50 years, gone, destroyed. And for what reasons? All the same mistakes that the West is making now. Canada, the US, and Europe. Japan, same absolute mistakes, and eventually you have to pay the piper. And it's getting there, and it'll happen slowly, gradually, and then suddenly. And you just got to be prepared, because when it does happen, you won't have a chance to get out.
Risk happens slowly, then all at once, right? Yeah. So Frank, back to gold, and we'll get Rob's views on this as well. But you said that you've never seen this disconnect in your entire career between the price of gold and the valuations of gold equities, and you say it's similar to the early 2000s when you were bullish, when many others had capitulated and lost faith. So can you compare and contrast, and Rob as well, those two periods?
Yeah, it's interesting because it's exactly the same problem we have today, a lack of sentiment. There's no sentiment, positive sentiment for gold stocks, for owning gold stocks. It's simple as that. The value's there. You can look, I'm familiar, as I'm sure there's many examples in this room. I happen to be a shareholder of a company called Aris, which is mining gold in Colombia. And if you just look at the numbers, it just doesn't make any sense. Market cap of $400 million, but it's got $100 million a year free cash flow. It has 20-year mine lives, really high grade. It's fully permitted to double its production and fund it. Nobody cares. Nobody cares at the moment. So let me give you a couple of anecdotes, because I think the first one is what happened in 2001, as you mentioned. And I remember when I was pitching the Wheaton River concept to my partners before we merged with Goldcorp. And I was sitting with Pierre Lassonde, who is one of the brightest guys in the industry. I have tremendous respect. I'm trying to talk him into joining me in this new idea of creating a gold mining company. And we were in the Toronto, sitting in a hotel in Toronto. He goes, Frank, and I'd been out of the game for 5 years because I was running Lionsgate, the film company. And he said, you've been out of the game too long. He said, it's over. Nobody cares. The gold will never go up. And I looked at him and said, Pierre, you can't see the forest for the trees because you're in it. you're suffering every day and you're dealing with your problems, step outside, look from the outside in, and you'll see there are reasons why gold is going to go up. I also went shortly thereafter, I don't know if you know Frank Holmes. Frank Holmes, very well known in this industry. He and I went just right after, we went on a tour through Canada, the US, and Europe, not pitching any deal. We were pitching the concept of gold to institutional investors. Because I had my theory, I'd written a paper on it. And we were laughed out of the room. People were just going, what are you crazy? Gold's $250 an ounce. There's no, you know, you guys are just a bunch of deal junkies that hope the gold goes up. And that's the sort of reaction we got. The other anecdote I have, which I think is relevant today, someone sent me an article the other day, a long lost article of an interview I did in 1989, a Financial Post interview, where I was talking about gold deals that I was financing at the time. And we were raising $2.5 million. I was boasting that we had raised $2.5 million for Bema Gold, which was the predecessor to B2 Gold, and now Kinross owns those mines. And that we were on a road show to raise $4.5 million for Robert Friedland's Fairbanks, which we discovered the Fort Knox deposit, which is still in production today. And I was boasting about a $2.5 million deal and a $4.5 million deal. A few years later, I remember getting a lead order for $10 million on a venture, a new mining venture, and I was thought, wow, this is incredible. By the 2000s, $10 million was like an odd lot. Okay, we were getting lead orders for $25 and $50 million. Today, the investment bankers in this room would be popping champagne for a $3 million lead order. So it's and I'm serious, it's absolutely true. I just experienced it on a deal yesterday, you know, which, you know, so it shows you that, and these things happen in cycles. So what I'm saying to this crowd is don't lose faith. These cycles, they come and they go. This will come back when the sentiment changes. And there may be some things that will change the sentiment. I have my own opinions about that. But once the sentiment changes, you should be long already, because stocks will double and triple before the market really is aware, before the general market is aware. You know, things will already have moved up. Cycles come and go.
Rob, do you have any similar anecdotes from that time, early 2000s to now? Because I know you say now is a delicious time to buy gold. That's the word that you use.
Well, it's lunchtime, right?
Well, yeah, it's delicious. Yeah, that's fitting. You've also many times predicted $3,000 gold, $5,000 gold. So what are the main factors that now is the time?
Well, many of the factors remain. Just excessive monetary expansion, incurring huge amounts of debt, and that with interest rates going up, it's now starting to show the damage it's doing. And people will start moving to hard currency. But you had after the crash of '87, then you had in the early 2000s, then again in 2015. And you just you're coming off a bottom, and then you have these almost exponential moves. You could almost call them the moves that the tech companies had. And things that I just look around and I see, as Frank was mentioning, I've seen really good drill results out there, and it's like pushing a string. No one's paying any attention. And you can pick them up for very inexpensively, but I'm looking at it and saying, you're going to get a 10x or 15x on some of these very quickly. You're starting to see some of the majors go in. There's a company called Hercules that pulled a really long hole, and Barrick just came along and put 25 million into it. You're seeing in Newfoundland all the gold that's coming out, Newfound Gold, Snowline, Goliath. All of these are just a few examples of the opportunities that I see out there right now. And I just go around and I start putting money into each one of them because I feel there's going to be a great run there. And that 3,000 and 5,000, given what's going on post-COVID, the amount of money that was pumped into the system, there was so much liquidity. And people just thought, zero interest rates are great, I'll buy everything. And so there'll be sectors that start collapsing under that interest rate burden, and people look for hard money, and they'll see it move into the seniors first, and then the juniors will run after it.
And Frank, you said you've seen the light with the junior exploration companies. Now you've got a few investments in that area, West Red Lake Gold Mines, Black Wolf Copper and Gold. You also say you feel like a kid in the candy store, similar to what Rob is alluding to. It's a great time to buy or build. So can you follow up Rob's thoughts there?
Yeah, it must have been a good day when I said that.
You did. At Beaver Creek you said that.
Okay, well, these days I feel like I'm a kid in Willy Wonka's chocolate factory. You know, first of all, you have to differentiate between West Red Lake and Black Wolf. West Red Lake is a fully built mine with an ore body, where the previous management made, in my opinion, some human mistakes that are easily fixable, and they will get back into production, in my opinion. Black Wolf is an exploration play where we're looking for a discovery. And we had a hole announced about a couple of weeks ago on a property we're very excited about, which shows that it looks like something like another deposit nearby, which is very valuable, but it's one drill hole. And if you're in this game hoping to find the mother lode after one drill hole, you're going to be sorely, you know, you're going to be very, very, very sad about that, because it doesn't work that way. Sometimes it takes 100 drill holes to find the actual ore body and to define it, to really know that you've made a real discovery. And so it can be very painful. It's not a sector for widows and orphans. It's really, you have to have steel kahunas to see a program through to the end. And so I took a bunch of my money and said, okay, I'll throw, you know, for me it's, you know, an amount that I can easily lose and not worry about it, and put it into some of these juniors. I did it with another one called McFarland that Werkley put me into. And I think you're along that one too. You know, if the management's good, the project looks great, you know, you have a good chance. But it's risky and it's tough, and you have to tough it out.
On to a different topic, more broadly with the mining industry. Rob, you've said that you think the industry's in a dire crisis right now. It's extinction versus prosperity. Very few younger people want to get into the business. A lot of older people are retiring. So how do you reverse, not you, but how does the industry reverse those trends and change perceptions that mining's a dirty old business?
Well, it is a problem. There's a looming and a present labor shortage that's becoming quite acute in the industry. And to control climate, we're going to need a lot more metal. So we're going to need more mines developing, and that's been expressed by Mark Werner, who is the head of the circular economy at Google. He just came out and said about a month ago, we need more mines if we want net zero, and there's not enough material on surface to be recycled. So we have to change the perception of mining. And there might be good reason for the industry to think about it. PwC has estimated there's over $10 trillion in ESG funds out there. So if the mining industry could shift in that direction, I think there's a source of capital that is non-traditional that could render in a period where you have the lowest cost of capital in the world for the mining industry in maybe the century. And I can just take our own example of McEwen Copper, which is a subsidiary of McEwen Mining. We've raised just under $400 million US in the last 2 years privately. And Stellantis, which is the 4th largest car manufacturer in the world, came along, and this was the first time a car manufacturer invested in a copper deposit. So Stellantis and Rio were in there. So there is money out there, and I think we have to start, one, change the perception so that the kids going through school elect to go into mine engineering or geology or related industries to mining. We just have to make it look more attractive. It's a very high-paying industry. There's all sorts of skills that are required there. And just in the project we're doing in Argentina, I brought in an architect who's considered the Steve Jobs of the green living building space 2 years ago, and had him sit down with our engineers and consultants and said, help us redefine mining and try to alter that perception and put a model forward that is much more acceptable to the mood of the general populace right now. And so if you look at the accommodation he came up with, it's beautiful. It's taking in what the Incas have done, terrace gardening. It's enclosed it in a large translucent atrium, has hanging gardens. It's producing a lot of its own food. It's dealing with its own waste. It's getting rid of carbon 1, 2, and 3. And it's 100% renewable energy. It's electric. It's use a quarter of the water of a comparable size copper mine, emits 1/10 of the carbon of a comparable size water. It's cheaper, and it doesn't have a huge tailing dam that's going to break in a seismic area and run down the valley and wipe out a village or two.
I remember you showing me some of the plans, and it is beautiful. It looks very modern and forward-thinking. Frank, you wrote a piece the other day about the need for critical metals, that junior explorers are really the unsung heroes these days. But one of your key conclusions was that the majors really need to invest more in the juniors for no other reason than to give them some more credibility. Can you summarize those thoughts?
Yeah, so in essence, the majors are swimming in cash and the juniors are starving for cash. Most of the mines that one finds in the world are usually discovered and developed by juniors and eventually acquired by majors. The majors have been suffering from a severe spanking they got about 10 years ago when they do what they normally do, which is buy at the top of the market and then spend the next 10 years writing down all of their mistakes. So they've been very shy to explore or to acquire. And my thought was, why not, if you have all this cash, you're going to need to replace your reserves, put in a lead order into a financing for a junior with a good project. That also validates the project for other investors. And now you have a toehold in the thing, and if it works out, you can acquire it later. That's what I think should be happening today, and it's not, you mentioned the Hercules Barrack thing, but it's not happening often enough.
You concur with that?
Absolutely.
Yeah.
Yeah. They're gun shy. And the prices have moved up a little bit, but it's, but I think also in the junior space, I mean, thinking back to Beaver Creek and the Precious Metal Conference, I mean, everyone's market cap is just tiny. And you're thinking, well, how does it appeal to an institutional investor? I think we have to see a lot of M&A of companies coming together, 2 or 3 at a time to get to a market cap that has any relevance. When we did Goldcorp and Wheaton River, there's one element that you have to deal with, and that's the social aspect. I mean, you have 2 groups of senior executives. Where do they go? When we did the Goldcorp, I had said, I'm leaving. I'm tired of this corporate governance crap. And boards of directors just sort of covering their ass. I just said, corporate governance, well-intended, but the application of it is just crazy. It's a huge tax on shareholders. So I said, I'm out of here. And we had $400 million in cash. We had no debt. And we were one of the lowest cost gold producers in the world. And I said, goodbye. And just put it into a larger company that the market embraced. So there wasn't, and the premium was 7%. It was almost nothing. And I think people have to wake up to the fact that, well, I want a big takeover premium. And you go, well, that's a nominal. It's not a real premium, because when one company puts a big bid out there, it usually gets subtracted from their price before they come together. So the benefit to the person receiving that is diminished greatly. So it's just getting together. And if we have a labor shortage, then there's lots of people to go around to build on that new company. So.
Picking up on Goldcorp and Wheaton River, going back to that time, you both said it was a magical time, a confluence of factors all came together, the stars aligned. But you've said, Frank, that sort of out of nowhere moment can never happen again. Rob disagrees, so let's get a little point counterpoint going here. Why do you say that?
Well, I say that because it was a confluence of events. Keep in mind, the stars did align perfectly. It was a moment in time. It was capturing lightning in a bottle, okay? And we caught the perfect market, 2001 to 2011, the perfect gold market. So we caught that entire wave. But more importantly, and I don't want to upset any investment bankers in here, but we had a group of investment bank. Well, first of all, we had Rob and Ian Telfer and myself and others that really hustled. But we also had a group of investment bankers like Mike Weckerly and Paul Reynolds at Canaccord, Gigi Banchini at BMO, that really were dedicated and hardworking and hustled and went out there, helped us to make the deal work. When we were trying to merge with Goldcorp, had it not been for Weckerly, it would have never happened. This guy was so stubborn, he didn't want to merge with anybody. And so Weck, said, listen, you got to come with me. You got to come to Vancouver. And so they got on a plane, came out to Vancouver. We had dinner at my house, drank a lot of wine, and we made a deal happen. And then when there was the hostile takeover, and we needed the vote of one institution that owned 15% and was going to vote against, Weck bullied himself into that guy's office with some other bullshit story that he wanted to see him about, and then dragged Rob and Telfer with him and made the guy listen, and he finally changed it. So you need investment bankers that really hustle. And listen, and again, I apologize if I'm insulting investment bankers, but I don't see that today. And you can prove me wrong, though, Bruce. Prove me wrong, but I don't see that kind of hustle today. It's not there. I mean, I just don't see it.
In that moment, that one account, they were opposed, and they flipped in the meeting after our presentation. But and that made the deal.
That's a great story.
And then we just had champagne when we launched it.
I bet you did. All right, so the gauntlet has been thrown down here at Red Cloud. And just quickly there, why can something like that happen again? Because Frank doesn't think it was just one of those things.
I think there are saner minds out there than Frank gives credit, that some people will do the math and say the combination will be greater and all parties will benefit. It's a harder sell because the market's conditioned to seeing, well, I want a higher price for my company, and someone else is saying, I don't want to pay that. But you need people coming together and recognizing they're going to stay small in this market if they don't come together. And it's easier to raise money when you're larger. Right now, it's very difficult and extremely dilutive when you're raising money at under $1, under a dime in a lot of cases. And the dilution is huge. So if you do get something big, the return is going to be diminished quite a bit. So you want to keep it. You want to put it together in the market, embrace it.
Let's get to a few personal questions, behavioral questions. Arnold Schwarzenegger has a book out called Be Useful, 7 Tools for Life. I've read it, easy read, amazing life. It's very good. So here are 4 of the tools. I've chosen these. Which of these, if any, resonate the most with you? Have a clear vision, never think small, work your ass off, shut your mouth, open your mind.
I would say I agree with all of them,
okay, yeah.
Except keep your mouth shut.
You'd got a business if you kept your mouth shut in this business.
But all the others, I agree 100%.
Yeah. I think he's just saying 2 ears, 1 mouth, just listen, open yourself up to ideas. I don't think it doesn't mean necessarily don't talk, but what about the vision? Like he literally would lay in bed and say, I'm going to be a movie star. I'm going to be the greatest bodybuilder. And he did it. And so, like, how do you approach that?
Same way.
Yeah?
Everything I've done in my life, inside mining, outside of mining, started with an idea that most people at the time that I floated the idea, people that were more experienced than myself tried to talk me out of. I remember I told you already the Pierre Lassonde thing, who said, it can't be done, you're wrong, blah, blah. Lionsgate was the same thing. I remember when I launched Lionsgate in 1997, people were telling me I was absolutely nuts. And actually, the Wall Street Journal came out with an article which was, kind of saying that, this guy's not going to last. This is going to blow up. And I've done it with philanthropy. I came up with, I wanted to solve global poverty with a model that was both sustainable and scalable that I could transfer to countries around the world. And I pitched this idea to Bill Clinton back in 2007. And, people were going, oh, yeah, you're going to alleviate poverty. And it took me 7 years and a lot of my money to find the model that finally worked, and we've been implementing it in 6 or 7 countries now. We're going to take it globally, and it works. And we're getting funding from USAID now and big foundations because they see that we actually have proven that we can raise incomes of poor people in the developing world by 2 or 3 times. People said it couldn't be done. My olive oil, I'm very proud of my olive oil. I set out to make the best olive oil in the world, and I said, I'm going to make the best olive oil in the world. And people, yeah. And I did. It's won every award on the planet. It's rated the #1 olive oil in the world. So you start with an idea, and it has to be bold, and then you work your ass off. And you make a ton of mistakes, and you have to recalibrate and retool. But eventually, if you're passionate enough, you'll get there.
Rob, what's your approach when you have an idea, and also when you're told you can't do something? I know you've said it's like a red flag to a bull. So again, clear vision, don't think small, like Frank is saying, work your ass off. And how do you approach it?
Well, I'd like to start by saying, if you haven't read about Arnold's life, you should buy the book. It's a great story.
Oh, you've read it too?
Yes.
Yeah, it is good.
Just, I mean, persistence and that goal, that vision, and just executing on it. You know, ideas are cheap. It's about executing on the idea. And that takes persistence. And it takes time. And you're investing your soul in doing that. And there are times when people say no. I remember I was putting some companies together at Goldcorp. When I was creating Goldcorp, there was Wharf, was an operating company we owned about 56% of. And I wanted to put it together into Goldcorp. And we had put a bid out, and I thought it was quite reasonable. There was a premium, and we hired a new manager, and I thought we were still finding more gold in Red Lake. So I thought it would look even more attractive to the independent directors of Wharf. We found more gold. Stock was up about 60%. And we went back, and the independent committee came back and said, we want more. Now, I was CEO of both companies, and so I'm going back and forth between the boards. And they said, we want more, and I looked at it and I said, we can't pay you more. This is ridiculous. I thought about it that evening. The next day we were going to have board meetings for both companies, but I was sitting in the bathtub reflecting on this, and we used to have a big bay window, looked out over a river, and I said, this isn't going to work. Got up, wrote a couple of equations down, emailed it to my Goldcorp directors and said, we should not increase the bid. Well, earlier that day, I went and met with my investment bankers, my corporate lawyers, and my senior management team, and I said, we shouldn't increase the bid. And first, the investment bankers walked out of the room and said, you've been working on this for 5 years, and you're going to blow it. Then the lawyers walked out. Then my senior management walked out. And I'm going, I wonder if this is the right thing. I sat in the bath reflecting on it. I said, no, this is the right course of action. Went back, went into the meeting the next day, said to the Goldcorp directors, I don't think we should do it, increase it. One of them said, we should pull the bid. I said, that's a good idea. So then I walked into the next room where the Wharf board was meeting, and I said, we're not going to raise the bid, and we're going to pull the bid. And the chairman of the independent committee went, holy shit, we're going to be sued. And so when we made that announcement, Goldcorp went up 10%, Wharf went down 20%. We did the deal 6 months later on much more advantageous terms. But it's somewhere in there, there's something in your gut that tells you, it gauges about right or wrong. And I'm a big believer that one's experience benefits your gut reaction. And as you said earlier on, and I believe, it's red flags, and you have to charge at them.
Right, great stuff. We're going to do a Q&A quickly. One last question. It's probably unfair. It's for another time, really, because we're running out of time here with this portion. But with philanthropy, and you probably know this, that studies have suggested that giving back, even one-on-one or in a large group, releases endorphins, positive endorphins in people, and hormones. And so just in a nutshell, why is it you both do the philanthropic work that you do? Because you've said that you love spreading the wealth and seeing other people become wealthy. You changed your life 17 years ago. Business and investing is a hobby now. So why do you do it?
There's an emotion.
Yeah.
I think you can look at a bank account and it's black and white. You can look at the numbers. It has no emotion. But you can write out a number on a check, give it to someone, and I've seen it create tears of gratitude. You enter new worlds. Like I think of myself running down a hall, it's sloping up, there's a door at the end, and I remember setting up a center for stem cell research and regenerative medicine, and all of a sudden some doors appeared along the hall of the wall, and you walk through them, and there are all these very bright people working really hard to make us all healthy. And what the work they're doing is like magic. It's a totally different world. And I can give you another example, which my wife and I put out a prize, $100,000 a year for innovation in stem cell research globally. And the first winner was a Japanese researcher called Shinya Yamanaka, who was able to take a skin cell, reverse engineer it into a stem cell, and jump over all the ethical issues about sourcing stem cells. And that's advanced. Now you can take it out of your blood. But 2 years later, he won the Nobel Prize for that same work. And you go, how do you do that again? It's just a remarkable, it comes back to you and you just feel that you're helping the world.
Right, right.
I have two reasons. One is to find peace, and one is to find purpose. Peace in the fact that you have to appreciate that when you succeed in life, that most of it is luck. Okay, there's lots of hard-working, very smart people out there that don't succeed. It's being at the right place at the right time, and I was one of those very lucky people. So I find peace to kind of mitigate the guilt that I have for being one of those people that succeeded, and I find peace in the fact that I can give it away. The second is more important, it's purpose. You don't want to be, you have to keep reminding yourself we're all going to die someday. And the last thing you want is to be lying on your deathbed, not believing that you had some purpose of being here. And I have had the opportunity to sit with some of my terminally ill, very good friends and have long discussions, and I can assure you they never talk about how much money they made. It's quite the opposite what they say about money when they know they're on the way out. And for me, it's that my purpose, and everybody's going to have a different purpose, okay? My purpose is in believing that when I'm on my deathbed, that I'm going to be able to say to myself, your existence here made many other lives better. And it's those two simple things. It's peace and purpose.